disruption. Well, Mr. Schubeck, it looks like the futures are gapping down significantly. And the point of it is that there is extreme turmoil around the world. Today's date just so happens to be 1:38 p.m. Pacific Standard Time on Monday, President's Day. It's 1:38 p.m. It's 2/21 of 2011. And you can see here, go ahead and see what you see here, Mr. Schubeck.
See the Dow index futures down 77, the S&P down 12.7, and the NASDAQ 100 down 27.25.
And so what do you, if we keep going on this course overnight, what would you say would be the catalyst? Why? And it's one, notice that we're out of the options expiration week, which just ended this last Friday, and this is the way the Monday morning gap down looks like right now around the world. You can see, what do we have here? These are the times right now that are going on, and these, look at here, look at that FTSE MIB down 833 handles. Wow. Swiss markets are down slightly. You can see all the times here. FTSE 100 getting a haircut. The CAC is getting a haircut. The DAC, that's weighing on our futures right now, this time of the day. Asian Pacific, wow. Look at the 225 down in the Hang Seng is down a little bit. So basically, it's a pretty good haircut across the board, Mr. Schubeck. So would it be safe to say that there must be some kind of turmoil going on around the world?
Well, the headlines are the crisis in Libya, crisis in Bahrain, you know,
and what
an
else?
Extension of the Egyptian, protests and revolts and all that.
Uh-huh.
And it's really gapping oil up.
And how high is, because we've been looking at oil stocks all day.
Oil's up well over 105.
Wow. Well, Mr. Schubeck, if we go north of 120...
108, excuse me.
108 is the current price of what?
Brent crude jumps to two-year high above 108.
Oh, my goodness. It sounds like another repeat of the financial crisis in 2008. And we're so extended and overbought on all of the indexes that we put out yesterday on smfprotrader.com. All the information is right there. People can view it who watch the video, and we're calling for a correction, and we're seeing it now, aren't we? Well, would it be safe to say that this is going to trigger some stop market orders in the morning's trading session tomorrow morning on 2/22/2011, Mr. Schubeck?
I believe it will.
Wow.
See some triggering happening.
That's right. And we're so overbought that they're going to take those headlines across the world and the potential supply and demand disruption in the oil. That's why we've been looking at the USO, among many other things, on our President's Day off, being prepared, aren't we, Mr. Schubeck?
That's right.
So would it be safe to say that in pre-market tomorrow morning we're going to be carefully examining that left elbow gap down in the quality names, and we're going to be looking at some of the like the DIG and the USO. We really like the USO one, and we're going to take a look and see where that fear could mount up in the marketplace, because if things start to happen in that Middle East and carry over to Saudi Arabia, what do you think that might do to the U.S. consumer having to pay $4 to $5 a gallon depending on what you use? If you're using premium, you're going to be at $5 or higher, and if you're using Joe Blow regular unleaded or whatever it is, it's going to be at least going up to $4. And is that going to choke the consumer off, Mr. Schubeck?
You bet it will.
So would it be a safe for us to say that you would be looking at shorting the overbought retail stocks, restaurant stocks, things that have a potential impact throughout 2011 going out further in the year?
Absolutely.
And would it be because that the consumer, they did jump up out of their wallets during for the Christmas season and the Thanksgiving season of 2010, And the thing about it is, everything is too bullish on Wall Street right now. We're going to start to see maybe a good long-term correction, because if things get out of control around the world, what do you think could happen?
To sell those markets off big time.
So if they also have inflationary problems in other parts of the world, contributing with supply and demand disruptions such as food supply, such as oil, and all of these various other things, what can that really do? Can they pass that on to the consumer the second time around like they did in 2008? So are profit margins potentially at risk in earnings looking forward?
They are seriously affected.
Oh, so by one understanding the progressive nature moving forward on 2/22 of 2011 is that everybody was expecting this big March rally, but guess what? We're so overbought, the rally's come and gone that would start March off normally, and could be quite the opposite we're selling would be in. That was our forecast, was it not, Mr. Schubeck?
Yes, it was, and we're going to see it tomorrow morning.
Okay, and one of the things is that bull is still strong. He's going to have to come off that left elbow side and run, and people are going to want to, are they going to want to buy, or you think it's going to start chipping at their bullishness now?
We're certainly going to see. Let's see how much power the bull has left in them.
That's exactly right, Mr. Schubeck, and the thing about it is, if things get out of control around the world, as we said it was coming. We said it in 2010 that we were going to have potentially huge supply and demand disruptions. Not only that, other places around the world, even like Wisconsin is doing right now, they're totally out of, protesting for their rights as what they believe they are for their city over there with the governor and all. But the thing about it is, the overbloated prices with potential inflation and higher supply and demand is a perfect recipe for some short-term put buying on the indexes, and also individual names that will correct off of their highs now before they can be bought again. So we could be potentially in a major reversal so far in the trend cycle. True or false in your view?
Absolutely true.
Okay, well, we're starting to see some of it right now. Like I said, it's very early on. Other markets around the world were open, and we're seeing a clear cut right now. That's a pretty big down move. And generally, if it is a correction in play, you have the big daily gap down, but you never close back above the daily half bar. And we will be working on looking at trade management in the morning on various different shorts and what that will look like. Here we are right here in the Euro, the FTSE, the CAC, the DAC, the IBEX, all of the things that we're looking at. Swiss market, they're all right here. When we get down here and click on more Pacific Rim, let's take a look and see at some of the times here if we have anything going down, or on the closing of 1221, as they fared fairly decent. Hong Kong, on the other hand, though, when we take a look at it, it looks like on 221 that we had some corrections there. And down here on the Hang Seng H Financials, which is key, they've got a correction moving, reversal. When you get into the China one at 1221, didn't seem like there was any. When their markets open up again, we're going to see if they follow suit, is what I'm trying to say. Taiwan, same thing over there. South Korea, we'll be looking to see what really happens there. Australia, whoa, we're going to see what happens over there. That heated up New Zealand, that Pakistan, well, we don't really pay a lot of attention to it, but once again, where is this India going to be when it does its thing? And that Singapore as well. So we're going to be looking around the world very carefully. Some of these haven't opened, but I can tell you they'll probably follow suit. So it's a huge move down so far in worldwide markets, and it's the SMF MMT updates, and we'll prepare for it.